Hello, everybody. How you doing? I just got I got some blood work done 2 days ago, and it just came back like 1 minute ago. So I'm reading about the blood work. I think my cholesterol went down. It's pretty good. I forget how it works. How you do the ratio? You do total cholesterol divided by HDL, I think. Anyway, I think it's good. We won't talk about my blood work. I'll look at this later. You always know that your blood work's fine, by the way, when they release it to the portal without calling you first. If you're dying, they call you. If not, you get an email saying your blood work's ready. All right, let's talk Twitter. So I sold all of my Twitter today, and I delta hedged all of my options to where I am now net neutral in Twitter. I still own all of my call spreads, and I will make a bunch of money if it closes for above 47, even if it closes at 54.20. I'll make a bunch of money. I'll break even or so if it goes to 20, and anything below 20, I'll make money. Why did I do this? So I still think that Twitter will win the lawsuit, and I'm not concerned about anything to do with the case. What I am worried about is just how disastrous earnings were, to the extent that Q3 is going to be even worse than Q2. And I am not, I just had a phone call with somebody that's very smart, that just a few minutes ago, that is actually considering shorting Twitter. And he's been doing this for 25 years. And he thinks that there's a decent chance the banks declare a MAC, or however you want to describe it, in the next few weeks, saying that if they close the deal, Twitter's insolvent. Here's the thing. If you take two people, someone who's been doing this 25 years, that's a bull, and someone who's been doing this 25 years, that's a bear, neither of them are me, that's an expert in merger arb and contracts, both of them will tell you that they're right. One will tell you, the bull will tell you that the banks can't get out of this because you have to be insolvent for years to come, not because of a recession or for something that's outside of Twitter's purview. So obviously this is affecting Snap and affecting every other social media company. So it's not specific to Twitter. A bear will tell you that when they put the projections out for the financing, they expected enough cash flow to cover all their cash needs in the following 12 months. And now it's increasingly likely, almost certain, that the EBITDA for the 12 months closing after this, after Musk would close, is not sufficient to cover their cash interest and their CapEx and any other cash costs that they have, severance, whatever. The way I look at it is, at 39.50, I don't see any scenario for it to go materially higher in the short term, because I don't see any way that they negotiate a settlement in the short term. As I've said in the past, I think the bid ask between what Twitter would settle for and what Elon Musk wants is extraordinarily wide. I think after this print and what Q3 is probably going to show, Elon Musk probably wants to pay like $40 for this thing, or in the 30s. Okay. Twitter's probably willing to cut a few dollars. Okay. In the past, I didn't think Twitter would even cut to 47 or 48. But if they were willing to offer Elon Musk 47 or 48 tomorrow, I'm not even entirely sure Elon Musk would take 47 or 48 right now, even though he's got a terrible lawsuit. It's in Elon's interest to wait to see if the banks on their own pull the financing, or to wait for Q3 earnings, which will happen around the time of the trial, but before a verdict. Expect Q3 earnings to be absolutely atrocious, and then hope the banks pull the financing then. You're then at court, and the judge has to decide whether the banks were legally allowed to pull the financing, and or if Elon nuked his own financing because of Elon's actions created the decline in revenue and cash flow. So maybe because of Elon's disparagement of the company and claiming he wanted out of the deal, advertisers are pulling their ad money from Twitter. while the uncertainty is happening, or maybe add employees have quit, so they don't have the employees to generate the ad sales. This is all a long way of me saying I don't know what happens in the short term that makes Twitter go up. Okay, I don't see any settlement anytime soon. There's never going to be a settlement until after the shareholder vote happens, so that there's no other terms for Elon to renege on. He could then say he won't close, after they recut. Um, One of my friends says they can ask Elon to put up $15 billion in escrow in the meantime if they did recut before the shareholder vote. So there's probably is some ways to uh, to get around the Elon risk if you did agree to a recut today. But at 39.50, it's a very different proposition than 34.50 when I made it huge. And I am not comfortable with the break price in the banks pulling the financing. I can't even imagine what the stock would do on the headline that the banks have pulled the financing. Would it go to 30? Right? Would it go to 25? Would it go to 33? It would go down a lot, I can assure you, because then you then have to rely on the judge saying that they were wrong to pull the financing, that Twitter is indeed solvent to the extent that the agreement allows cushion for cash needs over the next few years, right? Twitter's going to have the cash on the balance sheet to pay its obligations, even though it'll be a cash burn situation given the interest payments and the capex needs and other cash needs of the business. But it's hard for me to see what makes it go higher, right? Um, I did think it's really funny. I thought all along that the earnings would be a buy event because I thought that every arb in the world was looking for the terrible earnings to come out and then size the position up. And look, the stock's flat right now in a terrible tape and would snap down 30%. So I wasn't entirely wrong with that, right? And I didn't lose any money on it holding it overnight. I just can't get comfortable with holding a position when the risk reward is so skewed and where I can make the money on the options if it works out, and be hedged at the same time. So, most of my options position is Jan 42.47. So the way I lose is a recut below 45. If they recut below 45, I'm a pretty big loser. Any recut above 45, really above 47, I make out fine. And if it closes on terms, I'll do great. I mean, no problem there either. So that's where I'm at. Any questions? There's 22 of you on here. I mean, Snap numbers are so bad, and it wasn't a user issue with Snap, right? Their MDAUs beat and they guided to a beat. It's all based on revenue plummeting per MDAU. And that is so disturbing for Twitter. I know it's not the exact same business, but we see what Twitter's revenues did in quarter two. And Snap said that quarter three to date is flat year over year, which is a huge deceleration from quarter two and quarter one. And that's basically means Snap is pointing to a negative year over year quarter three for Snap. And Twitter should be pretty much the exact same problem. Twitter will cut costs, but they won't be able to cut them fast enough. The other issue with Twitter that's really confusing to me is their stock-based comp is so high that stock-based comp generally has to turn into cash-based comp when you're a private company. Now, my friend says they could issue stock options in a private company. So Elon can issue stock-based comp in a private company, but there's a myriad of problems here. So let's say you have to issue, $1 billion a year in stock-based comp. Well, Twitter's not worth $44 billion when you close this deal, right? it's worth whatever it is, 20 billion or 15 billion or whatever it's worth. Is Elon going to dilute his equity 7, 10, 15% a year? With private stock-based comp, the employees aren't dumb. If you know, you can't market at 54.20 and say I'm compensating you with 54.20 stock. Employees will just quit, right? It's very different when it's a publicly traded company and you can see what the value is to the employee. If I work at Twitter and you give me 10,000 shares, I know what I'm going to get for those 10,000 shares when I sell them. So if you really look at Twitter's true economic earnings and its economic cash flow, it's extraordinarily negative. And that's before the leverage buyout, before the interest payments are needed. I mean, they'd have to grow rapidly and have real cost cuts to get to just cash flow neutral. Again, using stock-based comp as an expense. So it just seems to me there are easier ways right now to make a buck. And I will revisit my hedge. So I'm short Twitter Common against my call spreads. And as the weeks go on, you know, the worst thing that it'll be is the stock will go to the early low 40s, 42, 43 kind of thing. It's not like it's going to go to 45 or 47. So that would just be shocking to me, outside of, you know, an article that says they're negotiating a settlement. I don't see them negotiating a settlement anytime soon. So anyway, that's my view. I'm quite frankly rather shocked the stock's 39.50. Knowing you, I'm guessing you're redeploying the capital. No, Glenn. I'm very happy that I now have a lot of margin and take a step back, breathe. We'll see what the next thing that comes to me. In fact, once SHLX is resolved, my margin will be the highest it's been in a long, long time. And then I can take a step back and just see what opportunity sets are out there for me. But as of right now, no, I'm not going to redeploy it. Twitter's results are atrocious, zero cash flow. They may have to file if they get taken over in this leverage buyout. So that is exactly the $1 million question. If they have to file, you know, within 12 months or whatever, that's what the judge has to decide. Based on the current earnings, then they're not solvent, and a CFO won't sign a solvency letter, and then the banks get out. The other thing that my friend said that was really smart is that in most cases, when the financing does not walk, it's because the buyer wants the deal still, and the banks are servicing the buyer and willing to go along with it for future business and for reputation or whatever. In this case, the banks know Elon does want to walk, and he would love them to cut financing. The banks are sitting on well over $1 billion in losses here, maybe even $2 billion in losses. You could do the math. I mean, it's 12, whatever it is, 12 billion in debt, probably worth right now, you know, 80, 85 cents on the dollar, based on where the interest rates are that they agreed to, and based on what they'd have to pay today to get the debt sold. So somewhere between $1 and $2 billion of losses the banks are sitting on, is my guess. So I don't know what happens. I'm not short it. Like I said, I'll make plenty of money if it closes. But I'm just taking a step back from it. And we'll see what happens. Any other questions? Well, you were what, 200% net long, right? Can't believe it. You know, it's true. I have a ton of exposure to the stock market right now. So for me, everything has to be looked at in context. By taking Twitter off, I bring down some of my net and gross exposure. You know, right now it's not acting like beta today, but in the past it has acted like beta because it's, you know, pricing at a percentage chance of the deal breaking completely, and that factored into my reasoning as well. Just kind of taking some exposure off the market. All right, no reason to make it longer than it has to be. So if anything changes, I'll try to do another YouTube. Are the banks not better off settling with a fine rather than continuing the financing? I've never seen a situation where the banks would pay the fine. Someone hypothesized that, if Twitter settled for 5 billion or something, the banks can pay 2 billion and Elon could pay 3 billion or something like that. I mean, I guess the banks can put in any amount of money they want to towards the fine. That then begs to ask the question, will Twitter settle for $5 billion? Some people have told me that they would. I don't believe Twitter would settle for $5 billion. And I'm not so sure Elon Musk would either. Now, Elon Musk is sitting on like a $25 billion loss right now if he has to close this, right? Twitter's not worth 44 billion. It's probably worth, 20 billion, if that, right now. So Elon would much prefer 5 billion loss versus a $25 billion loss. But I don't know if his ego prefers that. His ego might prefer a price cut. But I don't believe Elon's going to be okay with a $2 or $3 price cut right now. So you won't have any movement for the next month or 6 weeks. We'll see what happens with the banks. We'll see if the banks try to pull the financing in the next few weeks. I think they'll wait till after Q3, but who knows? It seems the market will keep Twitter in the 38 to 40 range till the news catalyst hits. I mean, that's my view, Tom, is that it's kind of dead money with a negative catalyst potentially, which would be the banks pulling the financing or just negative market risk. I don't really know what the upside is. Is it going to go to 41? It's really hard to see it go beyond 41, 42 range until there's a settlement because the skew just keeps getting worse from a risk reward standpoint. So the trade worked, right? It went from 34.50, 34.40 to 39.50. And now we'll see. It was a good trade. And I made a lot of money on the spreads too, mark to market. But I have a lot of exposure still now. So I need to get the next part right, which is closes on terms or settles above 47 or breaks completely and goes below 20. Those are my two outlets to salvage the rest of this trade. But they like it right now. I mean, look, it's being bid up right now as I talk. So who knows? Who the hell knows? All right. Peace. Happy trading. Have a great weekend, everybody. Take care.